Hey traders, welcome to the Algo channel, bringing you knowledge and insights from the trading world. Today I'm going to answer this one question. Can I make money with a simple moving average crossover strategy? I'm going to build some algos and then we're going to see whether they're successful or not and see whether it makes a difference if we change up the lengths and the time frames. And at the end of the video I'm going to share some tips on how you can turn moving averages into a profitable trading strategy. First of all, I'm not a financial advisor and this isn't financial advice. I trade with algorithms on cryptos, but remember, cryptos are high risk investments. You could lose all your money, so always do your own research. Let's go. So first of all, what is a moving average crossover? What do I mean by that? Well, it's based on the difference in the long-term price and the short-term price of an asset. Here I'm looking at a 1 hour chart, so each candle represents 1 hour of trading. And if you take the short-term average price, like the last 5 or 10 candles average, then you're going to get something a bit closer to this blue line here. Whereas if you take the longer term average, maybe 200 or 50 candles, then you're going to get a smoother, flatter line like this orange one here because there's more data, so it's going to all average out. And quite simply, the strategy is track these two lines and buy and sell when they cross. It's one of the most commonly used strategies because it's simple and easy to use, and we like simple and easy. Lots of hedge funds will use it, institutions, it's all over the place. Sounds great in theory, doesn't it? So why don't we go and play around with some algos and see whether it really works or not. So we're going to start by looking at a 50-day versus 200-day moving average on a daily chart. I'm building on a block builder algo software here. I prefer trading algos really because frankly I've got better things to do with my time than to stare at charts all day. I just want to set it running once and then go and do fun stuff. Not have to worry about market crashes because I've got sensible stop losses and take profits in place. This software is really easy to use. This scenario literally took me less than 5 minutes. It's not available to the public just yet. I've got access to a prototype here, but if you're interested I can leave a link in the description below. They'll give you access to an exclusive free trial period if you go and sign up to the waiting list now. So you can see here we're watching daily charts, 50 days versus 200 days, and you buy and sell market orders. This is the part that I really love coming up here. It's the backtesting engine. It's so quick and powerful. We're looking at 3 years worth of market data here, and you'll see the process just took 15 seconds. I mean, that's for 3 years of market data. That's insane. So let's look at the results of this test. After 3 years, we generated 6 trades, not fantastic, 33% win probability. Net profit 9.27%. Well, I mean, it's in profit, but against Bitcoin, it was down 17%. So you actually would have made more money if you just bought Bitcoin and held on to it for 3 years. So not entirely successful. Let's move on to the other time frames and see if that works any better. Let's have a time lapse. Snazzy number from our house band there. Nice and upbeat, I like it. So we started the day pretty poorly and it just went south from there. Absolutely atrocious, most of it. I'm not even going to go through the individual numbers, but as you can see there's a lot of red on the board. So why is that? Well, there are two main reasons really. I mean, the first one is that this is a lagging indicator. So from this chart you can see here, I mean, this is where the buy signal was triggered for one of them. Crossing over there. The problem is that the signal doesn't get generated until the end of this candle. So by the time that we buy, the price has already moved against us. That's the swing that we wanted to catch. Second is that this scenario notoriously only really works in a bull market. And if you use it in a bear market, you can get really stung. They say it's like catching a falling knife because it keeps cutting you on the way down. In a sideways market, you just get your pants pulled down by trading fees. So I promise you an answer. How can you turn this into a profitable trading strategy? Well, the answer is this. You have to combine it with other indicators. You need to make sure that it's operating in a bull market by having other conditions in your algorithm. You can combine it with moving average of on-balance volume, for example, to determine whether there's momentum in the market, or relative strength index to indicate whether there's value in an oversold or overbought area. I mean, combining indicators is how the pros operate. There's no reason why we shouldn't be able to too. I mean, the tools are out there. All you need to do is understand how they work, and that's where I come in. If you aren't sure what OBV and RSI are, then follow the channel, because I'm going to break down these and more over the next few weeks. So for now, happy trading, and see you next time.